Welcome to Dynamic Insights, our short yet impactful thoughts designed to help you view investing differently. Today we're covering how the Dynamic Alpha Macro Fund is fundamentally different from traditional managed futures strategies and why that matters. When the term managed futures is used, what they're really talking about is trend following. These are systematic, algorithm-driven approaches that identify trends. If something's going up, the algorithm buys it. If it's going down, it sells or shorts it. It doesn't interpret economic events, supply and demand shifts, or changing market conditions. This doesn't mean it's a bad strategy, but our approach is completely different. We use a discretionary global macro approach. We're not following trends. We're actively analyzing supply and demand imbalances across global markets. We interpret economic data, geopolitical events, and market fundamentals that algorithms simply can't process. Here's a recent example. We identified supply and demand imbalances in silver and captured strong gains. When we saw parabolic price action in late January 2026, we exited shortly before a 30% plus decline. Look, there's no crystal ball here. Success is about active analysis and discipline. That's why we got out while many trend-following strategies stayed in. So where does the Dynamic Alpha Macro Fund fit? 1. If you're currently using managed futures and want a complementary discretionary approach, we fit perfectly. 2. If you've been disappointed by trend-following strategies in the past, understand our approach is dramatically different. And 3. If you're relying solely on stocks and bonds, you're not truly diversified. Our fund adds multiple drivers of return beyond traditional asset classes, because real diversification isn't just owning different assets, it's owning non-correlated strategies and sources of return. Results speak louder than words. In 2025, we returned over 25%, outperforming the S&P 500. But equally important, we achieved this with only a 0.25 correlation to the S&P 500. That's true diversification. This combined with 73% up capture and 19% down capture helps to illustrate the power of a non-correlated, actively managed global macro strategy. Recent performance is available on our website.
If you're looking to truly diversify with a strategy that brings active, fundamental decision-making to global markets, let's have a deeper conversation. To access additional information, visit dynamicwg.com or email us at info@dynamicwg.com. Remember to like and subscribe so you stay up to date with future insights. Until next time, take care everyone and make smart, logical, and fact-based financial decisions.